All right. Let's get Chris in here. Chris, good morning. How are you?
I'm great. How are you guys? Good
Pretty
morning.
good. Pretty good. You're giving up your secret identity as a Marvel superhero, the Green Arrow, right now on live on the stream.
Yeah, well, I just rolled out of bed and put on the first thing that I could find that would make me look decent. So, matter of fact,
Uh,
before Twitter went down this morning, I knew I was supposed to do this morning, but for some reason I forgot. And I was laying in bed and I saw Tracy's tweet, hey, Chris Irons is joining us. And I'm laying in bed like, oh, fuck, I better get out of bed. So here I am. I'm dressed, I'm decent, you know, and I feel all right. And I got a cup of coffee. How are you guys?
Pretty good. Pretty good. Thanks. Pleasure meeting you. Nice being here. Let's get right into it. And the first, what's going on? Let's talk about interest rates. Let's talk about the FOMC. Let's talk about Waller's latest comments, which was actually kind of bearish, I thought. What do you think is going on in that space?
Well, I didn't, you can prompt me with Waller's comments because I don't know them off the top of my head. But what I will say is that when I joined FinTwit in like 2012, Tracy was like one of the only OGs that was around back then. And I think she predated me on FinTwit. She's been around forever. And I can't believe this is the first time we've ever talked, which is
I
crazy
know.
because we have been following each other and tweeting with each other for like 15 years or something. So let's get that out of the way. Now you can prompt me with whatever bullshit Waller said, and I can give you my take on interest rates and why everything is screwed going
Well,
forward here.
okay. Well, I agree with you. She is a iconoclast in this space for sure. And imagine my joy when I learned I got to work with her in February. I just learned in February, or no, actually maybe November last year. So I'm actually the winner chicken dinner here in this
I
exchange.
don't really do a lot of podcasts anymore. There's like a short list of people that, who invite me where I say yes. But I had to say yes to Tracy because it's just been like we've both been around for so long. So,
All right. So back to Waller. Waller says weak job market justifies rate cut in December.
yeah, well, I think more important than that, look, I think whether they cut rates or they don't cut rates, it doesn't matter. You have Fed policy and these 25 basis point rate cuts, even a 50 basis point rate cut, uh, that's going to hit the economy in whatever 12 to 18 months. There's a huge lag, just like we saw with rate hikes. We've had real rates for 2 years now. When they started to raise rates, I knew that it was a mathematical certainty that at some point the economy was going to grind to a halt, even though you could still argue that rates aren't restrictive where they are now, but let's just say they're restrictive enough. And here it's kind of taken 2.5 years because of all this excess liquidity that we had coming out of COVID to finally start to see the gears of the economy tangibly slow down. So now you're seeing the defaults and delinquencies start to rise. Now you're seeing the cockroaches come out in private credit, subprime auto, commercial real estate. And now you're starting to see the one signal that a lot of Main Street can understand, other than the stock market going down, but really what that is job losses. And so you see all of these major companies out there, Meta, and I saw one of the airlines the other day, are hacking off huge portions of their employed base. And I think more important than whether or not that's going to lead to a rate cut, because rates are coming down no matter what. They're either going to come down because these guys fuck around in a back room and decide, okay, all right, we're going to cut 25 basis points. Like, like anybody cares and like they have any clue what the price of money is, but we'll just let them have their fun. Either they'll cut for that, or what's going to happen is the economy is going to eventually crash into the wall of positive real rates, which I think we're very close to right now. You're going to have issues that we're already starting to see in things like private credit, subprime. That'll probably hit regional banks. I think I've been writing about on my Substack. And then the Fed is going to be forced to cut because if they don't, the shit will really hit the fan. And that I think would be like your more dramatic, 200 basis points over the course of a month or something like that. And even that isn't going to, it's not going to save things right away. So if you look, one of the things I write about all the time on my Substack is that the market doesn't usually bottom until after the Fed has, started cutting rates. So Lehman went bankrupt after the Fed started cutting rates. So when you mind the lag, does it really matter whether or not, Chris Waller is pussyfooting around, a cut here, a cut there? A better story with job losses would be how it impacts the passive bid and this automatic bid that continues to buy stocks on a cap weighted basis. That is what is driving these insane valuations and a high number of concentrated stocks in the indices, which is why you see market breadth in favor of decliners instead of advancers, but the overall S&P index going up. You see the S&P index green with 350 S&P stocks red. So I think that would be probably better to look at than, it's inconsequential really if they cut a quarter basis point in December.
And then moving over to, are you worried about this whole AI narrative not being exactly what it's portended to be? And some of the maybe accounting practices that are shady, to say the least. What are your thoughts on kind of that industry as a whole? Because it's literally keeping the market afloat right now.
Yeah, so I worked as a professional short seller for 10 years, and capex fraud is like one of the most common types of accounting fraud out there. I do think it's a legitimate concern, other than like the circuitous nature of all the relationships that these AI companies have that are driving this bubble forward together. So, and at the center, you really have like the weakest link, which I wrote about yesterday, which is CoreWeave. I actually started writing about CoreWeave months ago. I think there's financial engineering going on there, which is to say nothing of their IPO, which failed to have a bid at 40, was bailed out by Nvidia, and then all of a sudden wound up trading at 180. Like, you're not going to ever be able to convince me that bid was legitimate for the company at $180 a share. You have the circuitous nature of all these relationships, these companies that all are kind of depending on each other and have all of these agreements in place, meaning if one weak link in the chain goes, the rest of them are going to be affected. And we've already seen some of that with some of the contractual outs, I think, that OpenAI has, some of the comments that Microsoft has made, where, okay, like we may consider stepping back from this, this, and this. I don't know off the top of my head, but I was reading about it yesterday. And so, yes, I do think that, look, I go on Twitter and I watch these like 18 to 24-year-old, God, God bless them, because I was one of them 20 years ago, smashing beer cans on my forehead in between placing trades where I lost 100% of my capital. But I watched these people sit there and talk shit about Jim Chanos and talk shit about Michael Burry. Like, these guys have no idea what they're talking about. Like, these are people that don't understand enterprise value versus market cap, and they want to comment on how material capex fraud is. Capex fraud is, there's been whispers of capex fraud around data centers, especially if you listen to Jim Chanos, for years now. I've read some pretty detailed stuff on it, and it does look like a legitimate concern. The nature of capitalizing expenses is it's a fraud that is either at some point going to need the overall market to collapse to catalyze people looking back on it and saying, oh shit, you were doing this wrong the whole time. Or it's something that you need to kind of pry into deeply, to look at, okay, like what is being capitalized? Like, what does the depreciation schedule for these GPUs look like? And it's such a nuanced form of accounting manipulation that it's very difficult, especially if you're, with an administration that I would say probably now has a lighter touch when it comes to regulation, that it's very difficult to put out there and make the case for an immediate re-rating in a stock, because I've seen some pretty serious reports, public reports on publicly traded companies raising concerns about capex fraud, and the stocks have really not responded at all. And so, years ago, there was a report on Equinix that I thought was, worth reading. didn't really matter. Stock didn't trade off. Uh, Nobody wants to dig into like, all right, like what the accounting is on that. Doesn't mean the problems aren't there. It's like private credit, right? The marks all look great right now. Everything's marked at 100% of par right now. But like we saw a couple days ago with one of the private credit companies marks on, I think the company was Renovo. I mean, they closed Tuesday trading with a mark of 100 cents on the dollar, and they opened Wednesday with 0 cents on the dollar. And so that's how quickly these marks, especially when they're handled discretionarily, can change. And once these things start to re-rate and come back to reality, and once there is a pin that pricks the bubble, what's going to happen is everybody's going to be looking backwards, not like us talking about it now. Like, hey, there may be some trouble. Everyone will be looking backwards, saying, "How the fuck do we miss it?" And so, when you look back at 2008, or you look back at even COVID, the prevailing sentiment after the market crashed was, how could we have let AIG get 60 trillion in exposure to whatever, credit default swaps? How could we have known there were cases in China and in the US, and not known that this was going to have a profound effect on our economy and the market eventually? And so, my friend Michelle McCory would say complacency is a killer, which is why pride myself in my work in I'm okay with the fact that I am skeptical and I'm cynical. One, I think I've earned that right through working as a short seller and seeing demonstrable, innumerable amount of frauds, many of which are still trading today. And two, the financial media is doing the exact opposite. So CNBC airs 5 days a week. They have Tom Lee on 4 days a week saying that, this is the bottom and buy. And so it's like, okay. So I don't mind being a counterbalance, because I think I've seen kind of how they make the salami, where a lot of other people haven't. And I think that guys like Michael Burry and Jim Chanos raising these concerns about capex and depreciation, it's not just like they just woke up and decided to, talk shit about AI with no basis. Like, they're not those kind of people. They're very serious investors. They understand deeply what's going on, and I think their concerns are 100% warranted. So the only question is, when is the rest of the market going to feel like that?
Yeah, Chris, we got about a minute and a half or so left. Real quickly, I just want to
We
get your
just got
opinion on.
started.
I know. I just want to get your I just want to get your opinion
I
on
got out of
Bitcoin
bed for this. Come on.
on Bitcoin right now. Is this just kind of a regular pullback, or is there something more ominous here with the Bitcoin?
I think, and I never ever promote my own Substack, but if you want to go onto my blog, there's a piece that I wrote. I don't even remember what the hell it's called, but hang on, I'm going to tell you real quick.
I
Uh,
tried to log in this morning, by the way, and I think the Cloudflare outage messed
yeah,
me up.
Cloudflare is all fucked up. It's called The Eye of the Shitstorm. I wrote it on November 1st. The point of that article is there's four spots really where I think that, I call them like the four horsemen of the market apocalypse here. One of which is subprime auto, like I said, commercial real estate, private credit, but then also crypto. And so I'll give you my take and then you can cut me off. But look, crypto is, whether you think Bitcoin's going to make it long term or not, you have to understand that crypto is the top of the risk on spear, right? So crypto kind of is the leading indicator, I think, into risk tolerance for the rest of the market. So, if you see Bitcoin crash tonight another 5%, you can expect tomorrow morning that tech stocks will be down 5%, or tech stocks will be down, a couple percent. Why? Because it's a brand new asset class. It arguably, still has not been adopted for any major mainstream use yet, other than a perceived store of value. And I'm long Bitcoin, by the way, too. Like, I own some, not as much as I own gold, which is my number one, but it's the tip of the risk spear in markets. And so I think markets have to go lower, at least in the short term, before the Fed stops or bails them out as a result of what's going on in private credit and just the economy in general. And I think Bitcoin will lead that. There's a lot of leverage in crypto. The crypto universe is about $4 trillion. I think Bitcoin's about half of that. If you want to be nice, then assume Bitcoin and Ethereum are going to survive, you still have 1 trillion or 1.5 trillion of just pure dog shit in crypto. Things like your fart coin and your Shiba Inu and your Dogecoin, they should have never existed. They serve no purpose. And for all intents and purposes, the order book is nil and they can go to zero immediately. And I think they do need to go to zero at some point before we start to
Oh man,
kind of find some type of bottom, even if it's a Fed engineered bottom. So I think
Chris,
Bitcoin will lead the way, and I wouldn't want to be I wouldn't be in there buying the dip today, but that's just me.
I got you. All right, Chris, I really appreciate meeting you. Great, a pleasure meeting you for sure today. Unfortunately, we're up against time.
Yeah,
But
no
we'll have you
problem.
on
My pleasure.
again.
Oh, for sure,
Thank you.
for
You
sure.
got it. Tracy, thanks so much. It was nice to finally meet you in person. Me and
Finally.
Tracy, we
All
go
right,
back. Yeah. Take
thank you,
care.
Chris. Appreciate you. Man, oh man, I mean, I have 1.5 million questions for that dude.
I know he's really great. You know, hopefully we can have another conversation with him at some time. And he is just as real as that possibly gets. He just gives it to you straight. So gotta love the guy.